Joining me now is Richard Bernstein. He's the CEO and Chief Investment Officer of Richard Bernstein Advisors. Rich, that's a big call, right? I mean, this would be a pretty big deal. Welcome.
Yeah, thanks, Kelly. So I just want to be clear here. We're talking about the profits cycle peaking, which means that the peak growth rate in earnings is pretty much upon us right now. It doesn't mean the peak dollar amount of earnings, but the peak growth rate. So it's much the way we talk about economic growth and how you get a positive or negative growth. What we see is the growth rate in earnings beginning to peak and starting to roll over. Still positive. We're not talking about a profits recession, but history says that the market begins to discount that deceleration in corporate profits and that the leadership usually begins to change.
So is this all normal? Because how do I even describe the market right now? We have a 22% rally off the lows. We now have, is this a new bull market? Is this the old bull market? Does it have anything to do with the underlying profit cycle?
So that's an interesting question because, you know, it's questionable how much the market has been looking at fundamentals, period. You know, the whole Magnificent Seven effect was not really fundamentally based. There's been plenty of companies growing earnings 25% or more over the last couple of years. Nobody cared. It was 7 companies and only 7 companies, the narrowest leadership we've seen in 25 years. That's not fundamentally based. That's a rather speculative market. So it's questionable whether the market's been paying attention to fundamentals anyhow. That being said, what you're seeing and what you should see now, tariffs or no tariffs, as you said in the introduction, the profit cycle is pretty much poised to peak here, and tariffs had nothing to do with that. Certainly not going to help, right? But it really has nothing to do with it.
But I just enjoy trying to play devil's advocate because I like seeing the 401k balance grow. I don't want it to shrink. And, you know, if the profits growth rate is peaking, but profits can keep going, how long can that continue?
So that can continue for a while. And I'm not suggesting the market goes down. This is not a bear market call. What it's really a call is that the market's going, we think the market's going to shift back towards a fundamental approach, which means that more defensive sectors that hold up their earnings growth in this environment, their relative earnings begin to accelerate relative to the more popular sectors.
Okay, you have a couple of interesting examples here. I don't know if I'd go so far as to say that Apple's defensive, but as you note, it has the growth profile of a consumer staple stock. Talk about that and this incredible data point where you say if Exxon were in the Mag 7, it would be the median grower of the group.
Right. So that's my point about that. There's nothing magnificent. We could argue about whether the Magnificent Seven are good companies or not. I don't think that's important. The important is, are they unique and should they have the valuations that they have? Most of the time when you get people talking about valuations, they are tech analysts. They don't look at the broader market. They don't look at other sectors. They don't look at the growth in other sectors as well. What you will find is that Apple, for all the hype, and I'm not endorsing Apple, and we own it, I should point out, in some of our portfolios, and we do Exxon too. You mentioned Exxon. That regardless of whether you think it's magnificent or not, its forecasted growth profile, the consensus growth profile for the company, looks like a consumer staple company. What's so great about that when consumer staple companies that are actually growing, basically forecasted to grow basically the same amount, are like half the price in terms of valuation and offer a much higher dividend yield? So that's the comparison that people should kind of be making, is what's so unique about these companies relative to the other opportunities in the stock market? The answer, I would say, is increasingly nothing is unique about them.